Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Silent Pip Assassin, and I'm back with another live educational video here on Friday, right? January 24th, 2025. Um, you guys are in for a consistent education style that I love to teach, right? It's called the Power of Three. It gets you guys in a perfect position to get trades at its discounted areas, right? We want to find trades at discounted areas, right, where it limits our losses and it maximizes our gains. All right, where it minimizes our losses and maximizes our gain, right? Because this game of trading, right, is not for anybody that wants to come along, that wants to try to get rich quick, right? This is a method and this is a skill set that you want to learn so that way you can have longevity within the charts and still be able to trade whenever you want to, right? From wherever you want to in the world. All right. Now, the reason I call this method the power of three is because one, you have three trends, right? An uptrend, a sideways moving market that we like to call a range, and then you have a downtrend. All right. In an uptrend, you should only be finding areas to buy from. All right. You only want to find areas of value of where you could buy from. Right. At no point should we be trying to sell inside of an uptrend. All right. If structure is telling us price wants to go up, we want to go along with structure. All right. Then you have your downtrend. All right. At any point, at no point should we be looking to buy the market. We should be waiting to sell the market at the discounted right areas of value so that way we can maximize our wins, right, and minimize our losses. All right, and then let's break it down. Right, let's go into the trends and let's actually break them down. Like the uptrend, right? It makes consistent higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? And because it's making consistent higher highs and higher lows, right? That's identifying and letting us know that price wants to buy. So when price creates that new high, right? Let's say, for example, right? For example, price took out, right, this lower high, right? We knew that this was a lower high in the market. And let me make the pattern for you guys so that way, right, you're following along. All right. So you got price actually breaking structure here, letting you know that price wants to transition from coming from a downtrend, right? From coming from a downtrend to then transitioning to make an uptrend, right? That's what you want to see. You want to see price take out a lower high, right? Breaking structure to the upside, creating this new high to then pull back to find a deep area of value before price broke structure, right? So you want to find an area of value within this push right here that broke structure, right, for price to retest to, right? And those areas of values are these three areas of values right here, right? You have a fair value gap, right? And I may explain that when we look at the real charts. And then we have the what? An order block, right? And then you also have a structure level. So now in this case, for educational purposes, right? When price creates that new high and it retests, what happened is it found one of the last down candles before price actually bought to break structure. So it was one, let's just say, black candlestick right here before price actually took off and made consistent bullish candles, which are white candles, right? Pushing to the upside. And what happens is price comes right back down to that last down candle, right? And then it makes a reaction off of that level, right? Off of that level, when we get this reaction, we want to see a candle close above this level with our SL beneath it, right? And then we're aiming towards the highs, right? Price creates the new high. It retests to a level called the fair value gap zone. Once it gets back to that level, we want to see how it reacts at this level. If it ends up rejecting and closing above, we want to find entry points based off of our candlestick setups, right? Bullish candlestick patterns appearing at these levels is where we will want to get our entry after they're done being created to then take the trade back above the highs. Okay. Again, what happens? Price breaks structure, price creates this new high, right? And then price does a retest, right? It retests right back to this structural level, right? Right back to this structural level. And then what happens? We want to see rejection from this level. We want to see buying pressure from this level. Now, if price happens to break beneath your areas of value and close beneath your areas of value, it was meant to do so. All right. That means that area that you marked off happened to not be strong enough to actually hold price in the direction that you were expecting it to go to. And sometimes that happens, right? That's how you know that a trade was actually meant to go into and hit your SL, right? That's just naturally how you're able to figure that out, right? And then you understand and you're okay with the risk. All right, you okay, you're okay with you understand the move and you're okay with the risk that you had when you lost the trade. All right. Um, Everybody got that, right? Did everybody get that example? Did that make clean enough sense for you guys, right? Let's see if it made clean enough sense for everybody that's in the live session as of right now, right? If this has made sense thus far, right? Let's type a PL3 in the chat. All right, let's see if they got it. All right, Jaylene got it. Good, right? Brody got it. All right, Nigel got it. All right, a good number of people have it, right? Now, right? After that, right, you then have what? A downtrend, all right, where it makes consistent lower lows, right? Lower low, lower high, lower low, lower high. And just as price had to take out a lower high in this transition, right? Now price in order for it to move in a downtrend, it has to take out a what? A higher low. It has to take out a higher low. All right. It has to take out a higher low. All right. Price transitions takes out this higher low. And put this line right here, right? Just for educational purposes, right? And then price takes out that higher low. Then what happens? Price creates the new low. Price pulls back. And now it's finding the bearish side of these areas of value, right? The bearish side. So in this case, let's just say this is a fair value gap. You have a bearish fair value gap in this level, right? Let's create it as such. And then let's say price, we want to see bearish candles closing beneath our area of value to take the trade lower and have our SLs above the highs of our areas of value. All right. Price transition runs down, creates a new low. Let's say in this case, price found an order block, right? It found the last up candle now, right? The deepest last up candle before price actually broke structure to the downside, right? So instead of it being the last down candle, now it's the last up candle, right? The last up candle before price actually broke structure to the downside is where price could most definitely be attracted to in order for it to transition and go back down lower, right? So we would want to see bearish candlesticks close beneath our areas of value on the downside and then have our SLs above our highs of those areas of value. Okay. And then so on and so forth. Okay. Everybody got that, right? Same thing, opposite side, right? Nothing changes, right? These three patterns, right, start uptrends. These three market patterns, they start uptrends, are their continuations within uptrends. All right, write that down. They are trend starters, they're uptrend starters, and then these are also continuation starters inside of an uptrend that's already in transition. Everybody got that? All right. Then you have the bearish ones, right? Same thing, opposite side, flipped around. Nothing changes, right? Nothing is new under the sun, which means nothing new is going to be in the market. It's going to be the same thing um, over and over again, replicate it over and over again, right? And you got to find out a way to make it make sense and be as simple as possible to you, right? So you got a double top, triple top, and a head and shoulders. These patterns start a downtrend, all right? These patterns start a downtrend and they're also continuations within the trend. All right, same as these. All right, double bottom, triple bottom, inverted head and shoulders. Double top, triple top, head and shoulders. Okay? So then you have here, right? This triangle, right? Trading is a bit of a geometry. If you got it, if you never really realized that, trading is geometry. All right? Trading is geometry. Okay? Remember that, right? Because it creates shapes, it has trends, right? And those trends plays as percentages. And there are percentages in mathematical standpoint when it comes to trading. So then it's just as geometry, right? It has percentages. So now, right, and the percentages to tend to fall back within the Fibonacci tool, which aligns with percentages that it'll pull back to, like the 30% level. 38, I think it's the 38, the 30, 38 38 level, the 50 level, the 618 level, the 70 level, the and then I believe it's the 786 level, and then the 886. Those are the retest percentages that price will pull back to in order for price to continue to go higher or lower. All right. That's just off the top of my head. I can't remember exactly. I could pull it up, but I just really went over on the top of my head. Okay, it's right here actually. Right. So you got the 38 2, the 50%, the 618, the 70%, the 786, and then the 886. Right. I got pretty close if I didn't already get that right. But those are um, the retest for pullbacks. Right. We could do this as an example. Right. You see how price, this is the lower low. This is the new high. Right. From that new high back down to this area of value, where did it come right back to? Right? It came right, that order block lied within the 70% of that pullback, right? If you go and you move it again, right? You go to this higher low now, up to this new higher high, right? And I guarantee you it falls within where these retracement zones. You see how and you see me just write these down, right? Right? You see me have these already here, and they're already aligning with the Fibonacci as far as the percentages of how far these retracements are, right? From this level back down to here, right? From here to here, where the price come right back to a 38%. That's crazy, man, right? We can go down and look at this in a downtrend, right? The distance from the high to the low, right? From the lower high, I mean, from the higher high to the lower low, right? What's the retest? Where did it retest to? Right to the 618. And look where that fair value gap is, right? It's going to be very similar to this, right? Go to the new higher, lower high, down to the next lower low, right? Where did price pull back to? Within the 70% and the 786, right? So that means we would want to see a bearish candle close beneath those levels, right? Move down again, catch from this lower low to this, I mean, this lower high to this lower low, right? Where did price pull back to? Right back to the 38, right? Right back to the 38 too. You see how mathematically that falls in line, and then has you attacking the market that way, right? From this lower high to this low, price pull back to the 70%, right? So on and so forth. You guys seen that, right? So that's how the market transitions. That's how the market moves, right? These shapes right here, is this shape right here is a bullish, right, transition, right? This right here, when you see this create in the market, is creating price moving to the downside so that way it can shoot up above, right? So this is a bullish triangle setup, but it's called the descending triangle, right? And then you have your symmetrical triangle where price can go either way, right? And then you have your ascending triangle where price is transitioning up to then fall down. All right. Everybody got that? All right. It's just rolling up to be 10:30 Central Standard Time. What I'm going to do now, right, is I just explained all of that to you guys, right? All of that made sense, right? If that made sense, type a PO3 in the chat. If you have a question, type a one, right? If you got a one, if you have a one, type it in the chat. If you have a question, if you don't, and everything has made sense up until this point, then we're good, right? And everybody should already be in USD CAD, right? That is the trade that we just previously took this morning. So everybody should be in that trade if you're not already in it. All right. That is a trade that we're going to be looking to take to the downside. All right. That's going to be the live trade that I give you for today. All right. That's the live trade that I can give you for today. It's actually still near entry. So you guys have time to get in if you're not already in, right? If you are on the live session with me today. All right. So All right. What do you have here? Can anybody tell me what type of market this is here? All right. What type of market is this here? All right. Let's see if somebody can get this correct. Right. It's a sideways moving market. There we go, Jaylene. Right. Consolidation. Right. What's another term that we like to use? Sideways consolidation. And then the other one is called it starts with the R. There we go, Jaylene. Ranging market, right? It's ranging, right? And then another term is accumulating, right? It's accumulating data, right, in order for it to transition and go in possibly a new trend, right? We can't dictate the market. We don't know which way the market is going to go. All we can use is previous data to dictate where price is actually heading. Nobody truly knows. We can only go with history, right? And then history repeats itself. So right? You have price doing what, right? Price is moving clearly in a what trend right here, right? What trend is price actually moving in at this point, right? Let's see. From here to here, right? Which way is the market trending? Right? It's trending where, guys? You got a few people on the call. Where's way is it trending? It's trending up, right? Meaning that we need to be finding areas to actually buy from, right? We do not need to be finding areas to sell from, right? That's complete asinine, and you'll be actually hurting yourself, right, rather than helping yourself. All right. Again, if we're looking at it from just this standpoint alone, right, what do you get at this point, right? Remember how I told you these market shapes? I mean, these market patterns, like the double bottom, the triple bottom, the head and shoulder, inverted head and shoulders, how they start uptrends. What do we have here? Right? What pattern is this based off of the ones that I actually went over? It's the double bottom. A double bottom starting an uptrend, right? What did price do? It broke structure to the upside, creating a new high, right? Higher high for price to pull back and find what? An area of value, which is either a structure level or order block or even a fair value gap zone. In this case, right, price came right back to this structural level. Let's delete this pink purple line for a second. I mean, it's purple zone, right? From wicks to bodies is our structure levels. Price broke that structure level going to the upside. It retests back to that structural level, right? And now all we need to see from this structural level, if it's significant, is we want to see price continuously closing above, whether it's once, twice, or maybe even three times, right? Price went below this level, correct? But it also did what? It also stayed above, right? But also understanding that there's also a order block within this structural level, all right, which gives you double confirmation. So you got this indecision candle where it has a very small body, right? It has an extremely small body right here, right? That is considered an order block as well. Remember how I told you it was you got the last down candle before price actually broke structure. We want to find the deepest one or the one near the structure that it broke, right? That's what we want to find. So you have a wick here, wick here. We move that across, and as we see, price continuously closed not only above this level, structure level, but it also closed above this order block. All right. And we will want to take our entries once we see bullish candles closing above those levels, right? Enter here, it sells beneath, right? And then we're aiming towards what? We're aiming towards your either 1-to-1, which will be the same as your SL. If you have a 50 pip SL, you need to have a 50 pip take profit. Or you can aim for the highs. All right. Simple as that. All right. And as you see, it's always going to give you a great risk to reward rate ratio, but it's also going to allow your trade room to breathe so that way you can take the trade in the proper direction. All right. All right. Let's slide over. What ends up happening here, right? Price does what? It breaks structure, creates this new high. What does price retest back to? Right? The last down candle, the entire down candle before price actually broke structure. You see that? The deepest last down candle before price actually broke structure, right? And why is this one significant? It's because it lies beneath a fair value gap. If an order block lies beneath a fair value gap in an uptrend, then you know that that's a very strong order block, right? As well as that fair value gap level. All right. That's how you're able to dictate that. If there's a fair value gap that lies above an order block in an uptrend, right, that is a very strong level. Write that down. Right. You take your entry, it sells beneath your area of value, right? And then you're aiming towards your highs. You see that? Everybody got that, right? Everybody see how that works? All right. If you're good, type PO3, right? If all of that made sense to you, the way that I explained it, if it was extremely simple, type of PO3 in the chat. Now, if you have a question, again, if you do have a question, type of one. But as of right now, everybody is following along, right? And I'm going to continue to give you an example. Now, let's go over and find a downtrend. We're going to do that even on a different pair, okay? We're going to find a downtrend on a different pair. And you actually got one right here, right? A great example of a what? A great example of a what? Repeat the fair value. Okay, I will. I will. Give me 1 second. Let me see. I'll go over that. No worries. No worries. No worries. No worries. All right. So, let me go up and show you the fair value gap, right? Let me show you how a bullish fair value gap will look. So you see, excuse me, you see how this bullish candle and this candle right here, how the wicks of those candles don't meet in between the body of those, that makes it a fair value gap level. All right, so let's just say if price had structure here, if it had a higher high right over here, and then we were looking for price to pull back to a certain level, it could have possibly pulled back right to this fair value gap level and change directions to continue to go higher. That's how fair value gap is, right? If there's a gap within three candles, right? If this candle and this candle, and if those wicks don't meet in between the body of those candles, then that's a fair value gap level. So, example, if price did break structure like it did here, and then when it pulled back, if it decided to come all the way back to this fair value gap, it was granted. It was granted too, because that's a deep zone right next to an order block, right? You see that? Right next to an order block. So price could definitely have came here. But what happened is it broke structure, right? When price decided to retest, where did it retest to? Right back to this order block, right? Because this order block is what? Beneath the structure, beneath the higher high, right? It's beneath the higher high. So price came right back to it and did what? It took off, right? Everybody seen that, right? Did that answer your question, Sasquatch? Okay, great. All right. Now let's go again, find a different example. Guys, see how GA is taking off? That means UCAT is probably finna do its thing in just a second. All right. I think it was that. We were here. All right. What trend is this, guys? Right? It's in our face. Sometimes all it takes is us stepping back and just looking at the charts. Right? We're in the downtrend. So at no point should we be looking to buy, we should be looking to sell, right? How are you able to decipher what's a downtrend? How are you able to decipher that? How are you able to know that price is going to continue to move lower? Well, how are you able to understand that it's a downtrend in itself? It's going to take out a higher low. So you got a lower low, right? Price came here, respected this level, didn't move any lower, right? But what ends up happening? Price broke structure to the downside, right? That's indication that price wants to move lower. You got the break of structure, right? Price retest. Where's the retest to? Right near a structural level. All right, let's zoom in to that structural level. Right, broke structure of a higher low, took out the higher low, price retest. What is price retest to? Remember, wicks are structural levels. Wicks on the backsides of trades are structural levels. Remember that wicks on backsides of trades, on backsides of trends are structural levels. All right, boom, boom. You see how that works? A backside structure becomes a structure in the past, right? In the present, I'm sorry, right? Price retest right back to that level. You get a strong rejection and a strong candle closing right after this one, right? That gives you your engulfing candle off of an area of value or near an area of value, meaning you would want to take this trade from here, right? SL will be above, SLs would have been to the, below these points, or looking to the backside of trades to figure out where you can take the trade to, right? So boom, you made your money, you go about your day. Price creates a new lower low, right? What does price retest back to? Right? What does price retest back to? Can anybody tell me? Where did price come right back to? Right? From wick to body, what did price come back to? Right? Price came back where? Can anybody tell me? What zone is this? You got three zones. You got three types of zones. What zone did this price come back to based off of the backside structure? Come on, let's go. Let's type it up real quick. Real quick. All right. Jaylene said a fair value gap. Anybody else? Let's see if anybody else has got it. It came back to it created didn't come back to a higher high. We paying attention. What zone did price come back to? Jaylene said fair value gap. Gabrielle said, huh. Huh, I guess. A higher high, I guess you were saying. I'm being silly. Um, no, so price created this lower low and price retested back to a structural level. All right. Right? Price came right back to a structural level. You guys see this, right? From wicks to body, right? Price stopped here before and moved up, but then price ran below that level. So then when price came back to this, it rejected very strongly and gave you a strong candle closing beneath it, right? So that means we could enter market here, right? Dealt with a little bit of drawdown and initially took the trade lower than this lower low, right? And then what happens? Price creates a new low. It decides to retest, right? What is retest? What did price retest back to? Can anybody tell me? Right? After price broke this structure and price decided to retest, right? Price decided to retest. Can anybody tell me what price retested to? Right? Based off of just looking here before I even mark it off. All right. If you're about to type or if you're thinking it came back to a bearish order block, you are correct. All right, you are correct. So the last up candle before price actually broke structure is exactly where price actually came back to, right? Where you get rejections above it, you get a fake out. This is what a fake out looks like, where price closes above and then transitions to close back below an area of value. That's price action, right? That's bearish price action to the downside. That's when you could take your entry. Your SLs will be above those highs, right, of that area of value, and then you're taking a trade towards your low, right? And you see how that sets you up with a great risk reward ratio, and it still allows your trade room to breathe. And then you're not necessarily stressing or guessing or where you know and what could potentially happen in the market next, right? It's sort of kind of already there for you. You just have to follow the trend and follow the method within that trend, right? After that happens, you're good for the day, right? You made your money, you go about your day, right? You trail your SL. I mean, you trail you trail price, or you just simply just hold until it hits your TP, right? It's completely up to you. But you guys see the example here, based off of how this trend is operating, right? If you were on my call Wednesday, I told, I believe it was Ella, right? I believe it was Ella. I told her, I wouldn't want to buy, USDs right now until I seen it break a structure. And as you see right here, it broke this structure, right? I wasn't able to catch this how I wanted to. It didn't give me the exact setup I was looking for, right? But it did. It was a good trade in itself. It was a good trade. I was expecting it to do a little bit more before it actually took off. I was expecting a little bit more, right? But it I would have entered here if it would have showed me something else. But because it didn't show me anything else, it didn't show me what I wanted to see, right? I just actually just set out for this particular trade, but I went and I capitalized and gave you guys that USD CAD, right? Because if GU and EU and AU is buying, USD CAD is selling more times than not. All right. And the setup for a sell is going to be there. So if we go up, give me 1 second. Right. If we go up and we look at USD CAD, right, we see how it's kind of setting itself up for a sell. It's taking a little bit of time, right? It's taking a little bit of time, but it's potentially setting up for a sell. All right, potentially, right? So, did everybody get that down? All right, everybody got that, right? It's making sense. Did that make sense? All right, what I'm gonna do right now is I'm gonna allow you guys to take a picture of this. All right, I want you guys to take a picture of this. I want you guys to remember this, right? Because this is how the market operates. And the more and more and more you study this, the more and more it's going to become simple. So I'm not going to say it's easy, right? Because we all go through our mental things. We all deal with certain things, and the market can get to us a bit, right? But we want to move in the right direction, right? We want to move in the right direction. We want to follow the trend because at the end of the day, right, following the trend will put us in the right position more than it'll put us in a bad one. So, um, with that being said, guys, with that being said, you guys notice how I did not actually even go over this ranging market is because we don't want to trade in it, right? Simple as that. We don't want to trade in it. We don't want to see it. If we do see it, ways we can capitalize off of it is seeing whatever happened before it, because more times it'll happen after. Sometimes it's not, sometimes it will. All right, so you just gotta play it. You gotta play it safe. All right, when it comes to these, 50-50 moves, right? 50-50 shapes, 50-50 trends. You gotta stay very, 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 very. You gotta stay very, very level headed when it comes to those. All right. But with that being said, guys, I appreciate you guys for getting on. Appreciate you guys tapping in. Make sure you like, subscribe to the channel, man, and press that notification bell so you guys can see and know when I drop these videos. All right. With that being said, guys, like I said, I'm out of here. It's your boy, the Solid Pip Assassin, aka Mr. Miyagi, and I'm out.